In 1973, which may be your first run at the Washington Post, you began to buy shares.
Yeah.
How did you come to the conclusion?
I'd looked at the prospectus in 1971 when Charlie and I first met Kay Graham one time, and they were going public right at the time of the Pentagon Papers. And then in 1973, the stock got very cheap because their television licenses were under challenge by B.B. Rebozo, Nixon's friend, and the stock went from, I think, like 38 to 16 or so in a very short period of time. And when it got down to around 20, just in a few blocks, we bought almost 10% of the company, and that now is about 18% because they've repurchased shares. When it got to about 20, that meant the whole Washington Post company, it had 4,800,000 shares. The whole Washington Post company was selling for $100 million. Now they own the Washington Post, they own Newsweek, they own 4 big network television stations, including CBS in Washington, D.C. and all of that.
Jacksonville, Florida.
I mean, everything, and they didn't owe any money. And if you had taken those separate parts, you literally could have been out in the middle of the Atlantic Ocean, you know, at midnight in a rowboat, and you could have sold them for $500 million. People would have been swimming out in shark-infested waters if necessary.
And you could have had all of it for $100 million at that time.
For $100 million. I mean, you weren't going to get all of it. Yeah.
Here's what I don't understand. How come 95 people didn't see that?
It was amazing. We were buying it from big institutional investors, and they were bailing out of it. And if you'd asked any one of them what the pieces were worth, they would have said something close to what I would say. But they thought the stock was going to go down. So what? You know, and the stock did go down. In fact, after we bought it, it went down a little more.
So what? Warren Buffett believes that I'm not looking at the price of the stock. I'm looking at the value of the business.
I'm looking at the properties, and I'm looking at the Graham family. I mean, that stock we paid about $10 million for is probably worth $1.5 billion or more today.
And they haven't $10 million, and it's worth $1.5 billion.
And they have not struck oil. They have not invented a cure for cancer. You know, they've just taken those properties and kept doing reasonably intelligent things, and sometimes very intelligent things, with the money generated by it, and they've developed the properties they've had, and they've been terrific stewards of the money, but there's no miracles involved.
Kay Graham told me that when she met you, she'd never even understood how to read an annual report, that's what you brought to her, some sense of helping her come to grips with the idea of making business decisions.
Kay was very, very smart, but she didn't have the confidence. And I told her my job was to get her away from looking into that funhouse mirror that she was looking into about herself and distorting it, and looking into a real mirror. And when she looked in a real mirror, she'd see a person that was perfectly capable of running the Washington Post or any other company.
How long did it take her to learn that?
Well, it was, you know, fits and starts over time. But I had the right raw material. I mean, she was good. She was good. And she'd had beaten into her over such a long period of time that wasn't what she could do in life, that it took some convincing. And she had to see evidence of success and all that sort of thing. I said, Mrs. Graham, I said, you know, you control this company lock, stock, and barrel, but you're still worried about me. So I said, what you're doing is you're looking at me and you're seeing fangs, and I'm telling you these are baby teeth. And I said, they really are baby teeth, but they always look like fangs to you, and there's nothing I can do except take them out. I said, even though they're baby teeth, I'm going to just take them all out. So I'm perfectly willing. You call George Gillespie up here, your lawyer, and I said, I'll sign an agreement that I'll never buy another share of stock of Washington Post unless you give me the okay. And I said, I'm fine. You know, I want you happy with me. I want you nervous about me. And so George came up, and I took out the baby teeth, and she saw fangs falling to the floor, and we got along great ever.
Okay, but you already had
we had
$10 million invested or not?
Yeah, we had $10 million invested. We had 9%, 9 and a fraction percent of the stock. I told her the smart thing is to repurchase your shares. I mean, and the shares I would otherwise buy, you should buy for the company, and we'll all get richer if you do that. And she had a lot of other people advising her otherwise. But she decided to do it, and that's the reason we now own almost 18%, I believe, of the company instead of 9 and a fraction percent. The Buffalo Evening News was bought in 1977, and I gave Kay first shot at that.
You did what?
I gave Kay first shot at that.
You said, if you don't want to buy it,
yeah, I'm going to buy it.
Why would you do that?
He just felt it. You know, she'd been good to me, and we were a big holder, and they were in the newspaper business, and she wanted to buy things. But So I just said, I'm not gonna find that I went up to see Vince Mano on a Sunday and bought this thing away from you, so that you otherwise would have bought. So I gave her a shot at it.
In 1983, you purchased Nebraska Furniture Mart.
That's right.
For $60 million.
Mrs. B.
Tell me about her.
Well, this is a woman that walked out of Russia, got on a peanut boat, landed in Seattle with a tag around her neck, couldn't speak a word of English, and the Red Cross got her out to Fort Dodge, Iowa, which is what the tag said. She couldn't learn the language. She moved to Omaha because there were more Russian Jews here that she could talk with. Her oldest daughter started school, came home and taught her the words that she learned. She took 16 years to save $500 so she could start this company, and she's selling used clothing, bringing her siblings and her mother and father over, $50 at a crack. And in 1937, took $500 and went into business and competed against all these people who had all kinds of advantages over her in every way, and she killed them. And
she killed them?
Yeah. And
how was she able to kill them?
She cared about it. She was smart. She knew the limitations of her knowledge, and she was confident within her circle of competence. She didn't get outside of it, and she took care of her customer. She sold sheep, and it took her a long time, but she built the largest home furnishing store in the country in a town like Omaha with 700,000 people.
So how did you come to buy it?
Well, I was in love with this operation. I mean, that's my kind of woman. I bought it when she was 89. She worked till 103. There was a period there where she left for a couple of years. If you went over to Mrs. B's house, as I did, and very nice house, and you go in, and on her sofa, her lamps, her bed, there'd be little green tags hanging down, because it made her feel like she was at the store. I mean, this is a remarkable, remarkable woman, and the punchline, Charlie, is she couldn't read or write. And I think every business school in the United States ought to study her. I mean,
what would they learn?
They would learn the essence of business. They would learn that taking care of your customer is what it's all about, taking care of, and by that I mean giving them good deals, which nobody would touch. And working like crazy. I mean, she was there day after day after day, and she had a passion for it. And the truth is, if you took the Fortune 500 CEOs and I gave you first draft pick on 10 of them, and I'd put them in competition with Mrs. B, she'd win.
No doubt.
She'd win. Yeah. She understood business. And she understood people awfully well, too.
In 1988, you started buying Coca-Cola. How come?
I don't remember exactly. Probably read their annual report. Probably read the 1987 annual report, and I've watched it some, but there just comes a point, there's a tipping point, in terms of knowledge you've accumulated over a period of time, price changes in the stock, which had gone down some. They were heavy repurchases of their own stock. Roberto and Don were doing a terrific job. Nothing bad was going to happen to Coca-Cola, so I started buying. Most of it in that period from the middle of 88 to early 89, but then a little further on. But we put overall about $1 billion into it, and it's probably worth about $8 billion now.
And you have no intent to sell?
No.
You have said, though, that during the bubble,
it got overpriced.
There were some
Very
things that you might have sold,
sure,
and would have been wise to have sold them at that time.
If I was running the partnership like I did back in the 60s, I definitely should have sold those stocks. Stocks went crazy.
But you do not today look back and say, I should have sold Coca-Cola when the bubble was there, because
it wasn't me. I mean, I wouldn't, I knew it was selling at a very fancy price, and I even wrote about it, and same way with Gillette. But I don't do that very often. I'm not saying I wouldn't ever do it. I mean, if we went into the wildest speculative orgy in history, and some of these things went crazy, maybe I would sell some, but it's not it goes against the grain. For one thing, wonderful businesses are not that common. And if you get a big position in a wonderful business, not a bad thing.
What is the single best investment on a large scale that you have made?
GEICO twice in my life. 3 times in my life has been a good investment. I mean, it was a good investment when I was really 20 years of age, and when I bought, I put 3/4 of my net worth in GEICO when my net worth was like $10,000, and that caused my net worth probably to double or something like that, and that was great at the time. In 1976, the company got in trouble. And we bought what turned out to be half of the company for like $40 million. And then in 1995 or so, we bought the other half for $2 billion. And that was a good deal. So it's been a triple play.
Help me understand this. You're sitting with more than $40 billion essentially in cash.
Right.
You could buy some big businesses, I would assume, for $40 billion.
Right.
But you don't see any at a price that you want to own.
That's right. And when I look at the deals that have been made in the last year, there's not one I'm envious of. So, I mean, it isn't like we missed them. I mean, it may turn out that I should have bought one of them, but I mean, there's none that I feel, gee, I wish I'd bought that last year. But I hope I buy one tomorrow.
I know, but I mean, there's nothing. I mean, you don't look at General Motors and say,
I look at General Motors. General Motors is selling for about $15 billion now. There's 500 million shares, 28 or 29, something like that. And the whole General Motors company, $15 billion. And of course, that was the most powerful company in the world, back when I was a kid. So
and you could have it in a second.
Well, I don't know about that, but I certainly can buy. I can buy plenty of.
What don't you know about that?
I mean, buying the whole company is a different story.
How much is the whole company?
The whole company would cost $15 billion, about 100% of the stock. Yeah.
So why couldn't you pay $15 billion and get General Motors?
Well, they might not like me doing it. There's some other things.
Oh, sure.
But,
I understand.
But nevertheless, I could buy a lot of stock at a valuation of $15 billion.
And you think it's a good buy today?
I think it's too tough to figure.
Too tough to figure.
Yeah. It is a company that sells 25% of all the vehicles in the United States and 1/7 of all the vehicles in the world, and employs hundreds of thousands of people, but it's got some terrible obligations outside outstanding.
Like Fiat, or that's what they took
Fiat,
care of.
probably, yeah. But the Fiat deal they solved for $2 billion.
Right.
But still $2 billion
Things
out the
like
door.
that, yeah.
But the big problem was that they really entered into contracts with the UAW that were based on the economics of market dominance, and they don't have market dominance anymore. But they still got the contracts. And I don't blame the UAW. I mean, it was a free will negotiation, but they signed up. I think they're paying like 2.5 people that don't work for every person that works, or something like that. In terms of retirement and health care, and that gets to be crushing if you're competing with people that don't have the same obligations.
You've looked at this closely.
Well, I look at all the things.
When you read 8 hours a day,
right.
You have a chance to cover a lot of.
But General Motors, and listen, I think they're doing a great job considering the hand they're dealt. But General Motors is a huge annuity and health insurance company with a major auto company attached. And unfortunately, the huge annuity and health company has got a terrible bunch of contracts out. I mean, it is worth some big minus number. And the question is whether the auto company is worth a big enough plus number to offset that big minus number, but you can't separate the two.
And you can't figure it out?
Well, I can figure it out.
No, but you can't what?
Well, in the end, I can't come to a conclusion that it's obvious that.
Well, that's what I mean. You can't come to a conclusion.
Right.
Because you don't have all the facts, or because
no, I got the facts.
What don't you know? Why can't you reach a conclusion?
I don't know whether you can exist with the kind of obligations they've got and 25% of the market, and very tough people like Toyota and all kinds of people coming at them who don't have those costs. They call them legacy costs.
Here is the dilemma. You got $40 million in cash.
40 billion.
40 billion, I'm sorry.
There's a difference.
There's a difference. Yeah. And you've gotten so big that you got to make a big play.
Right.
That's your problem.
That's my problem. And I thought it was a problem when we were a lot smaller, and it was, but it's a bigger problem now.
So what happened?
And if I'm lucky, it'll be an even bigger problem 5 years from now.
Tell me how the dilemma plays itself out for you.
The odds are good, Charlie, that one way or another we will find reasonably intelligent things to do with most of the money. But they won't be as intelligent as the things that we could find 30 or 40 years ago with much smaller amounts of money. Nowhere close.
Because there are few there.
They're right. It just can't. It won't happen.
What's the test? What test does it have to meet?
It has to be a business that I understand. It has to be a company that I think has some kind of enduring competitive advantage. It has to be a management that I like and trust. And it has to be at a reasonably attractive price. Price is the least important, but it's still important.
As always, we really appreciate your visit to our channel. Do not forget to click the like button, leave your comments below and subscribe to the channel to join the community for more interesting finance contents like this. Thanks for watching and see you on the next one.